The trend is here. And the thing is, mainstream doesn't notice the trend. And I think maybe even the people who watch this show don't really realize how big the trend is. Over the last 10 years, price of gold has gone from 1,100 to 4,200. That's a 256% increase. And price of silver has moved from 13 to 57. That's a 315% increase. But I think the real trend right now is in deliveries, like we were talking about. Something big is happening on COMEX. I've been screaming that forever, right? And in the December contract, which went off the board 29th, a couple days after maybe the day after Thanksgiving. So far, over 10,000 COMEX silver futures contracts have stood for delivery. 10,000 at 5,000 ounces each. That's more than 50 million ounces of silver that have been taken off the exchange, including 565 contracts or 2.8 million ounces in a single day. So over 60% of the COMEX registered silver was claimed in just the first 4 days of trading in the 2025.
Andy Schectman says the gold and silver markets are breaking down. 50 million plus ounces left COMEX in 4 days. London faces a real liquidity crisis. China is locking up global silver. And AI data centers need massive amounts. The BRICS gold unit is launching with 40% backing and fast settlement. Billions are flowing into physical metals from top institutions because, he says, they know what's coming. Thanks for watching. Subscribe to Fine Metal for more updates.
Before recently, I don't know that I would have agreed with it because I really hadn't researched it much. But I've been approached by a couple very big names in the industry recently to perhaps be very front and center in new programs that they are launching, which I will have the pleasure of talking to you about soon, Dunnigan. But until we get to that point, I've really kind of dug into this a little bit recently. And, the gold market globally operates on a fractional levered system. And we're seeing some of that start to crack right now with the amount of deliveries. And that system basically operates where a small amount of physical metal backs large volume in paper claims. That's the rehypothecation that you speak about. In other words, each ounce is sold over and over and over and over again because no one ever stood for delivery. And that's why it's worked for decades, because few ever did. In fact, when you and I start talking about the others in 2020, the group on the COMEX that was standing for delivery, that was the central thesis of everything I was saying. You're like, this is so weird, Dunnigan, because all of a sudden it went from 0 to 100 where no one was standing for delivery. Now you got this big group standing for delivery. But now you have central banks repatriating gold. Remember all the banks that we talked about, the German Bundesbank, the Dutch National Bank, the Bank of Austria, Hungary, Turkey, Poland, the Czech National Bank. They all repatriated their gold from the Bank of England and the New York Fed. It's about trust. And investors now are shifting, as you mentioned, to this tokenized gold. And the more I dig into the offers or to the possible opportunities that have been presented to me, the more I begin to think, yeah, this may actually have a profound effect because it gives fully allocated and instantly transferable and fungible ownership of the real metal. Not only does this undermine demand for paper gold, which is, I think, been exposed by much of the world. They see the rehypothecation. They see the Achilles heel of the system is standing for delivery. At the same time, you have countries like China and India and Saudi Arabia and Russia that have been accumulating silver, taking possession of silver and gold, reintegrating it into their system. We're seeing China, the second largest producer in the world, as I've said on your show 1,000,000 times, they're going to Mexico and Peru and buying doré and concentrate before it even hits the market by buying this stuff in a pre-refined stage. So they're locking up supply at the source long before it has any chance of reaching the global exchanges. And so I think that this is putting huge stress on the market. Ultimately, will put massive stress on the market. And then you have the U.S. Department of Interior, who adds silver to the 2025 critical minerals list, as we've talked about. And in order to get on that list, by the way, the metal has to be essential to the economy or to national security. Should have a vulnerable supply chain and no easy substitute. So this creates strategic stockpiling demand, and again, and a structural tailwind for demand that's supported by national security and policy. And they should be worried about the supply chain and the geopolitical risk, because the United States imports 2/3 of its silver. And, I was reading something the other day that blew my mind. It says AI data centers especially burn through silver. It says every server and power unit uses a little, but tens of thousands of machines lock up thousands of ounces permanently. And powering these centers is even more silver intensive. A 500 megawatt solar farm, enough for one major AI campus, can require up to 300 metric tons of silver, or 9 to 10 million ounces. So all of this is happening while the U.S. relies heavily on foreign silver, and physical metal is leaving the transparent markets. 75 million ounces have been pulled from COMEX since October. Moved to stronger hands. Sometimes I ask myself, because, well, it's true. I ask myself, is it wise to say these things that I believe that kind of go dark, and people say, he's a blowhard, he talks. But it's nice. I mean, I started talking about this unit well over a year ago, maybe two, I don't remember, but talked a lot to you about it and all the shows that I did about it, because it's not as prevalent in everything I talk about these days, but for a good 2-3 years, it was. I remember 2019, 2020, and I kept talking about the unit and the Belt Road and all this stuff. My wife said, you never stop talking about this. People are going to get annoyed. I said, but you don't understand. I'm the only one talking about it for the most part. And I see it so clearly. I believe it. I don't care. I'm going to stand out on the limb and say it. And it was cool to be right, to be proven at least the majority of what I said. A lot of it happened, and nothing ever happens the way we think it's going to, but variations of it. But the unit is something that I think is happening. And well, they just rolled out the beta test. But before I cover the unit, what I believe is the rails of the unit is exactly what China is doing to expand the internationalization of the digital yuan. Now, they're saying that not to piss off President Trump, period. And what is that internationalization? It is using the Shanghai Gold Exchange to build a series of multi-jurisdictional vaults throughout the Belt Road Initiative, starting in Hong Kong. What is the reason they chose Hong Kong first instead of Shanghai? Well, Shanghai was the only one. Next one is Hong Kong. Why would they do that? Because if gold comes out of China, it must go through Hong Kong to come out. Okay, cool. So the first trade they did, United Arab Emirates and China, the two of the four initial developers of the M-Bridge technology, which the unit will run across, which is a cross-border payment system that is not compatible with the SWIFT system. So there's no sanctions available there. And it settles in 7 seconds at a 98% reduction in fees. Now, the idea is right now, the way that it's set up before we talk about the unit, is that China can buy oil from United Arab Emirates, and they'll pay for it in digital yuan. As of right now, the UAE could go to the Shanghai Exchange in Hong Kong and stand for delivery. China has made it immediately convertible into gold without having to switch to dollars first. So UAE says, I really like gold for that. So go ahead, give me your yuan. I'll switch it into gold immediately. Boom, done. These rails, these vaults will be built all throughout the Belt Road and Asia, Africa, South America. We already see vaults expanding in Singapore just built a new one, and St. Petersburg just built a new one. And of course, they're building a BRICS platform. And we have all of these vaults in the United Arab Emirates and in Brazil, all around the place, that will have gold that are all connected to the same system. Well, this is the rails for the unit, as far as I'm concerned. 583 million paper ounces traded on Friday. That's 75% of annual global mine supply in one day. And the COMEX had 103 deliveries and the LBMA 553. So, it's getting crazy. In China on Friday, silver closed above $60 an ounce. And so, we keep seeing the price higher in China, which is kind of pulling the price along with it. I just think that things are beginning to really, really, really change. And now you got banks like UBS who are vocal saying that the 300 million ounce physical deficit, and we've been seeing that every year between 1 and 300 million ounces going on the 6th year in a row, is turning them bullish. And they recommend long positions in silver they've never have before. So, yeah, I think when you talk about central banks repatriating gold and all of the stuff we've been talking about, standing for delivery, sovereign wealth funds, commercial banks, huge deliveries, to me, what this boils down to is that it will ultimately trickle down into the retail market. And it hasn't yet, but it will. And when it does, it will happen very quickly. Things will just become very difficult to obtain. It doesn't happen at the highest levels and then just stop. I think you'll see it move down into the retail market. It's interesting because on just about everything but American products, premiums are as low as I've ever seen them. The American products, they seem to be going higher and higher. But you will find, I think, that what is a easy to get, flush, supplied, laden market in retail very quickly will change. Not there yet, but I think it will, based upon what we're seeing around the globe. The retail public is just more or less asleep, and that's the truth of it. So, yeah, I think there's great values everywhere. Maybe the best value I've ever seen in my career is pre-65 silver, ever. But short of that, anything that you're buying right now in this environment, when the smartest money in the world is doing the same thing, is all you need to know. That's where the value is. The people who are doing this, the central banks, the commercial banks, the sovereign wealth funds, and some massive traders here in the U.S. who this is what really pisses me off. Nobody in the mainstream media has asked the question, who's doing this? Or even alerting the public that billions upon billions upon billions upon billions upon billions have come in since November of last year. For the last year, we see these kinds of inflows where literally millions and millions of ounces of gold and silver are standing for delivery every month in New York. Why is no one asking who's doing this and what's behind it? Is that by design? I would argue probably is. But all you need to know is that I'm doing the research for you all so you can see it to be true. And when you see people at that level, they're the most well-informed traders in the world. They know what's coming. They don't do it for the hell of it. That's all you need to know, period. And here we are this month again, massive record deliveries. No one's asking. This is not a market that it's reaching its limit or ending. When the most sophisticated traders in North America, a la the commercial banks, are going long and standing for delivery, who are being backed by someone big enough to where not even the media will talk about it? Is it the wink, wink, nod, nod Treasury Department? Is it the Exchange Stabilization Fund? How about Bo Hines? Bo Hines, the CEO of USA Tether, who was Trump's crypto czar, and Tether has $14 billion in gold, and buying gold with all of their excess reserves that they're getting through the issuance of stablecoins backed by treasuries, and the interest on those treasuries isn't transferable. Gold and silver are becoming far more valuable than the currency that stands behind it or that is used to purchase it. And I think that's all you need to know. So anything you're buying right now to get you out of the dollar into the trade that the biggest money in the world is doing, there's your value.